How Bitcoin benefits from global stresses. An asset that gains from disorder is surely worth having in one's portfolio, says Jennifer Murphy, CEO of Rune Digital Assets. Deficits, inflation, war, bank failure, cyber attacks, de-dollarization. These risks loom large as they threaten stock and bond returns for investors. Historically, U.S. Treasuries have been a safe haven, providing some protection from crises, but from 2021 to 2023, Treasuries delivered 10%, their worst three-year performance since at least the 1982. Similarly, the 60/40 diversified portfolio suffered its worst performance period in 14 years with a return of 16% in 2022. In an increasingly uncertain world, what's an investor to do? You're reading Crypto Long and Short, our weekly newsletter featuring insights, news, and analysis for the professional investor. Sign up here to get it in your inbox every Wednesday. In his book Anti-Fragile, Nassim Taleb explores the unique characteristics of things that gain from disorder. The immune system, for example, is more effective after exposure to a cold. Laws are clarified by suits and appeals. Software is battle-hardened by hackers who exploit flaws. What if you could add a portfolio asset that may benefit from global stresses, that is improved by uncertainty and volatility? Consider Bitcoin. The Bitcoin network appears to thrive on stress. When the Chinese government banned Bitcoin mining in 2021, 50% of Bitcoin mining capacity was forced to shut down or move. Within 7 months, capacity had completely recovered, and it is now over twice what it was prior to the Chinese shutdown. In the past 15 months, the world's second largest crypto exchange declared bankruptcy, and the largest exchange was sanctioned by the U.S. Department of Justice. Bitcoin network transactions were unaffected, and trading volumes are near all-time highs. As an asset, Bitcoin may be increasingly anti-fragile as well. When Silicon Valley Bank collapsed on March 10, 2023, fears of contagion sent stocks down by over 1% the next trading day, but Bitcoin rose by 20%. This safe haven price response was a new phenomenon for Bitcoin, and time will tell if it persists. But Bitcoin is outperforming all other asset classes over the last 1, 3, 5, and 10 years, periods that include many stresses. Research from Galaxy shows that a 1% allocation to Bitcoin and a 55% S&P 500/35% Bloomberg US X/10% Bloomberg commodity portfolio over 5 years from August 2018 to August 2023 would have resulted in higher returns and better risk-adjusted returns with virtually no impact on volatility or max drawdown. Last week, Fidelity added Bitcoin to its diversified ETF portfolios in Canada with a 1% allocation for the conservative ETF and a 3% allocation for the growth F, with many Bitcoin ETFs now available in the U.S., such as the low-cost Franklin Templeton ESG or iShares IBIT. It is easy for U.S. investors to follow suit. Little by little, your portfolio may gain a lot.